Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. This is Blockhead Traders for the week of November 23rd, 2025. And in this week's episode, we are going to dive into AI. I'm joined by Viper XL 007, and we're going to start talking a little bit. It's going to be connected to trading, but we're going to stray a little bit away from the topic and touch on AI and see, is AI really going to replace your job? And with that in mind, is there a way to kind of trade this? And we're going to take an interesting perspective here in this episode and kind of just talk through some of that, some of the feasibility of that, and some of the way that we might want to look through the lens to AI companies or companies investing in AI when it comes to trading in the markets. But before we hop to that, I want to give a shout out to our Discord, a link in the description below. You can hop in there, say hello to myself, Viper, some of the other Blockhead traders. Love to hear what you're trading, love to hear what type of content you want to hear about. Also, you can find a link to thetagang.com/sprocket888 as well as /ViperXL007, where we post each and every one of our equity trades, the good, the bad, and the ugly. Last, this is available in an audio-only format wherever you get your podcasts, so look us up, subscribe, and if you can't find it there, let us know and we will get it there. But let's hop to this week's content. Viper, we're coming up here on a holiday week. So this is a topic that I'm sure is going to come up on many a Thanksgiving tables this holiday week here in the U.S. And whether or not it will be this exact conversation we're going to have, I bet you that there certainly will be discussion around artificial intelligence or AI, the economy, jobs, inflation, all of that stuff is sure to come up here this holiday week. And I kind of wanted to chat a little bit about kind of an interesting discussion I've had at my workplace. And others have kind of inquired and been talking about, this same concept in other areas. And that's really, is AI going to replace your job? Or is AI going to displace the thousands of workers and hundreds of thousands of workers across the country and put them out of work, forcing the economy into a massive job decline? Well, companies ramp up their spending on AI and all of these things to just basically put all of us workers out on the street, which will just further crash the economy and just create this bigger gap between wealth and non-wealth and the poverty line and all of that stuff. That's the doom and gloom. And I think it's an interesting conversation because this type of fear has kind of come out historically, over the tens of hundreds of years of major technological advancements. And what I think really ends up happening almost 100% of the time is the big fears that everybody lays out there are not really what happens, not even in that close to it. So that's Viper, where I kind of want to just jump in there and kind of talk about, is AI going to take your job? You know what? It probably is, but it's probably not going to take it in the way that everyone thinks it's going to take it. And that's really the premise of what I want to kind of talk about today, is try to look at this and from a different perspective, and kind of let's look at what might be the unexpected outcome of this, so we can be a little more prepared for it. And then we're going to tie that into trading and how might you take some of this thinking, some of this possible outcomes, and incorporate that into the market and some of the companies that are out there in the AI space or talking about AI, which, spoiler alert, is just about all of them. I would love to go try to find a transcript of all of the most recent company earnings and see, out of all the companies that reported earnings, how many of them mentioned AI at least once. And then of that, a nice Pareto of how many times AI was mentioned and what was the company's name. Because I almost kind of feel a little bit like the more that a company leans into the words AI and the things around it, maybe the less they've got going on and they're just kind of trying to jump on a bandwagon.
Yeah, I mean, I think it's an interesting topic for sure, and like you said, certainly will come up, and I'm sure has come up many times throughout the year. But I've given it a lot and a lot and a lot of thought, which is not to say I have any expertise or um, accuracy to those thoughts, but are a lot of thoughts that I am looking forward to getting into.
Yeah. So, Viper, let's kind of just jump over to some of this. And I know if you go back into past episodes, you'll hear us talk about historical patterns when it comes to trading, when it comes to price action, when it comes to all those things. And one of the things we say is, history never repeats itself, but it often rhymes, which is kind of a saying out there where events that have happened in the past don't necessarily mean that those events are sure to repeat verbatim as they had in the past, but it is likely sign that something similar to that will occur yet again, or something that is of the same vein of that. And that's really where I kind of want to start when we talk about AI as a technology, as a disruptive thing to the economy, as a disruptive thing to the workforce. And what I want to just bring up is major tech events in the last, 200 years, and kind of just phrase them real quick here to remind people that these are things that happened and the world didn't end. The employment didn't cease to exist. It might have been reshaped and redefined, but in all of these cases the environment ended up coming out stronger out the other end. And the first one on that list is basically textile machinery. And what is textile machinery? Think of all of the mechanical looms and things like that that would start making clothing, making blankets, making all of those things in the late 1700s, and before the 1800s. All of that stuff was made by hand, made by humans, weaving these things and making them and selling them. There was no such thing as a mass produced, here's all these Levi's jeans or whatever, right? All the clothing was made by hand. A lot of times they were made by the people themselves that were going to end up wearing them. And it was a skill set that was there. And so then these textile machineries came along that could make things in mass scale. And everybody thought this is going to be the end of all of these crafts. So this is going to be the end of all of this, hand making this and hand making that. But it really wasn't. I mean, yes, they did mechanically make things a lot more, but those people weren't displaced. They ended up becoming machine operators of these things that were making the equipment. They ended up spending more time learning how to design garments and design that stuff that was going to be manufactured later, right? And fashion just kind of evolved. The production of clothing evolved into a much stronger thing than it was before. The next thing that kind of came along was mechanical farming. Think of all of everything was plows and horses and just toiling in the field, where it was just hours and hours and hours of labor. There was no tractors, there was no plows, there was no combines, there was not all of that mechanical things. And when those started coming along, everybody thought that was going to be the end of farming as we know it. And it was the end of farming as they knew it, but the entire industry really shifted, and the productivity from the same set of land would yield more crops. It enabled less people needed to do the actual manual farming, and that shifted people into more manufacturing jobs that started raising the salary of workers because those manufacturing jobs would pay more. It created the drive to the suburbs, the drive to the cities where these people would kind of go away from the countryside. Yeah, did it change the countryside? It sure looked a lot different. But there was actually more jobs, there was more wealth and stuff that was created in this time. And then fast forward even more recent to probably all the viewers' memories here of the advent of the computer. They said, oh my gosh, the computer, it's going to remove the whole office clerk. It's going to remove this, it's going to remove that. But in reality, it created so much more office work. It created so much more efficiency and proficient work operations. It created entire brand new industries around, tech and all of the things that come with it. And no longer did they have to get out a piece of paper and scribe all this stuff on a ledger, right? You can enter it into a spreadsheet. You can rapidly aggregate that out, add it up. The accuracy increased. There was less errors, right? All of this stuff was a net positive for the workforce. Next one, ATMs. Everybody, this is the automatic teller machines where you go and get cash out. And yeah, maybe people don't use them much anymore because cash is kind of falling away. But when these things came out, the fear was this was going to replace bank tellers. There was going to be no more jobs as a bank teller. They were going to be completely replaced by this machine. But what actually happened is there became more bank teller roles out there when ATMs came out, because what it did is it lowered the cost of operating a bank. And so banks actually opened up more brick and mortar banks across the country, actually employing more tellers and more workers because the ATM reduced a lot of the overhead costs of running a bank. So again, not what people had expected. And the very last one was internet and email. It was going to put the post office out of business. And, well, the post office is not doing so good now, but thank goodness for junk mail. But it was going to put all kinds of other things out of business. But what ended up happening is, yeah, some things did go out of business, but the entire new industries formed. E-commerce became a thing. Warehouses became a thing. Delivery became a thing. I mean, how many times now when you first started buying things online, you would wait weeks to get what you want. Now it can come in about an hour. And there's a lot of jobs that had to go into that to facilitate a lot of that stuff. And so what I want to underscore here is I don't know what AI is going to do, but in every historical event, yes, things are shaped differently, but everyone's worst fears never actually came to fruition. In fact, in a lot of times, things came out stronger and more beneficial as a net aggregate for a particular economy.
Yeah. And I've been thinking a lot along those lines. And so especially the historical precedents, like you went through, some of the things that came to mind for me was even trying to draw more parallels within the modern age, because, to me, like calculators and spreadsheets were a super scary thing to bookkeepers for a while when those came out. And at the end of the day, there's a there's a I don't know, law, an economics law or whatever you want to call it, but it's called the lump of labor fallacy. And so that is an economics idea that there's this assumption that there's a fixed amount of work. And so when you add workers to the workforce, and for all intents and purposes, all of these iterations of AI, they're workers because they're doing things. It's creating something. And this lump of labor fallacy has cropped up at every one of these moments that you mentioned. And the reality is that it has been wrong every single time, that there is not a fixed amount of work, that as the landscape changes, the work changes. And along those lines, there's like if we equate it to social media, who I think also to your point, the impact is things we can't even predict, jobs that we can't even imagine yet. Like think about going to 1995, even the 2000s, even 2000, when everybody knew what the internet was, everybody knew what a website was. It was the bubble, and who could have predicted social media manager as a future sought after job title? Like that is an entire career path now. And so that's the kind of thing that, every time I go through this, either in conversation or just thinking, with myself, there's a couple hard truths that I think are very important to underline. And we're going to unpack some of them in a minute, but the hardest truth is absolutely disruption. I mean, I do believe that that AI and the era of what happens next is industrial revolution size, as far as disruption. Jobs will get replaced, new jobs will get created. And that's just the cycle of things, like you were saying. And so there's a manner of being prepared for that, which we'll go to in a second. But the last thing I wanted to say I do want to give a little carrot, a little nugget to the doomsdayers. I'm not absolutely not on the doomsdayer train, but as it relates to this list and the historical precedents, there are elements that make AI different, and make it significantly different in some ways. And so this would be the rhyming more so than repeating. And that is the things that I think make that stand out to me are the breadth and speed of the technology. So calculators affected calculation, spreadsheets affected bookkeeping and financial modeling. But AI is just a kind of a broad sweep. It's touching writing and coding and analysis and art and customer service and legal work, medical diagnosis. It's hitting all of this stuff all at once. And so that makes it different. Doesn't make it bad, doesn't make it doomsy, but definitely different, rhyming. And then on top of that, it affects cognitive work. So previous waves mostly automated physical or routine tasks, like we were saying with the textile machinery and stuff like that. And our response in an economic sense, the economy responded by saying, learn creative and analytical skills and you're going to be fine. And so AI certainly challenges that assumption head on, because that's not necessarily true anymore, because a calculator made an engineer more productive. It was a compliment, but will AI make a writer more productive, or will it just write the thing? And that ratio matters a lot. But that's just, to me, that's an exciting thought experiment. It's, jobs do get replaced in a sense, but, I think the bigger picture is adapting to the landscape, no matter what job, what field you're in, and learning and growing and following the way that things are changing, because more jobs will be created for sure.
Yeah, totally agree with that. And I mean, I just think before we hop to kind of evaluating some of these companies and how do you look at that in the market and the lens through that, I just kind of point out the fact that you and I are sitting here in different parts of the country on consumer purchased equipment that doesn't break the bank anymore. And we can record a production that's going to be blasted to across the entire globe. Now, only 6 people are going to watch it, but the fact that you and I can put that together for next to nothing cost wise and basically create that was completely unfathomable, 20 years ago to do something like this. And so that's just the speed and of which things can move and empower, and basically technology can democratize a lot of things by lowering that bar, lowering that barrier to entry. And I think AI is exactly another technology that's going to democratize a lot of things. It's going to put a lot of aspects of technology more in the grasp of the common man and empower them to do things. And who knows what they'll come up with when they have the ability to kind of level up on that. It's like that textile machine. When that started making garments, nobody ever thought, wow, I now have all this time to sit and design things. So who knows what people are going to come up with when they have this AI technology that will help them kind of achieve certain aspects, and it won't do everything for them, but it's going to allow them the space and the mental bandwidth and mental capacity to who knows what come up with.
Yeah. And along that line, exactly along that line, the other thought that I've had, and I've had this basically since my first aha moment with Chat GPT at the time, since that was the only thing, is, I mean, as ever the technologist in me, I firmly believe and always have believed, it's part of what I love about technology, is that technology is at its absolute best when it gets out of the way and when it lowers barriers. And so along those lines, and kind of like you were just saying, to me, um, the advent of AI. Well, forget that for a second. I firmly believe that we have, as a global society, as you know, as everything, all inclusive, we have never seen the full extent of our human capabilities. We have never seen the full extent of what we are able to do or what we're able to create. We've only been able to see what the people who were able to break through their barriers were able to create. And obviously, we've done incredible things. I mean, the global production, just how we've evolved over time. But there's been so many incredible ideas we'll never know about that were stuck in somebody's head because they had a barrier to entry to realizing those ideas. And so to me, AI comes swooping in, and it's not the definitive end all be all, but it is smashing significant walls down to unlock those ideas and bring them to life. And I mean, I think both of us being in technical fields, we get it all the time. I mean, as long as we've been in college or before college, that how many times has someone come up to you with no technical background and been like, I got this great idea, but I need you. And that's not to say we're being replaced, but that's saying there was an idea in there and it didn't strike my thesis. So I passed on it. And then maybe that idea never got born. We never saw it. And so to me, AI is that kind of technology that it smashes those barriers and unlocks a whole lot of things. And who knows what that's going to create. But that's my ideological pulpit on the optimistic potential.
Yeah. So let's keep this because we're the blockhead traders, and so we gotta pull this back into the market somehow. And so I kind of want to bring up a couple of things that I don't think always sink into people's heads, and some of this is going to be a little bit of a tie into, hey, this might be a way that AI is going to end up replacing you or putting you out of work before you kind of get rehomed into a different role. And these are kind of fundamental truths that I think are inescapable no matter what is happening in the world and what is happening in technology. And the first and the foremost that I need to bring up is in the mind of traders, when you're evaluating a company, sure, you've got price action, you've got, the trends and sales growth and revenue and all of that stuff. But guess what? At the end of the day, people only invest in companies that are profitable. And when people pour money into companies that are not profitable, it doesn't mean that they are just bored of their money and they're just going to dump it in and burn it. It means they think there's a vision there that's going to become profitable. It's going to be a growth area, and the profits and the revenue will come. But guess what? That check becomes due at some point, and the inescapable truth is profits and cash are king. You will not be a company that exists in a capitalistic society if you do not generate a profit, if you do not have good free cash flow. You can go through phases where you don't have that in anticipation of growth, but at some point, that check is going to become due. And I think that's very important because right now, I think the industry, particularly in tech, is getting dramatically reshaped about the classification of the companies. And what do I mean by that? Well, what I mean by that is take all of these software companies that have historically been the Googles, the Meta, the Oracle, all of these software driven companies who have very high profit margins because software is, once you make it, it's copy pasta all over the place. You don't have significant barriers and costs of entry. But what AI is doing for a lot of these companies is they're building their own LLMs. They're building data centers to house all the compute to run the LLMs. They're buying hand over fist servers and chips and all of this physical inventory. They're buying land, they're owning, right? They're taking on all of this debt and expense, and they're basically going to eat into their profit margins because now they're going to have this overhead expense, this equipment, this depreciation, the cost of electricity, all of these things. And that can dramatically change a company and make it a lot slower, a lot less nimble, because now they have debt on the balance sheet. Now they have all this stuff. And I think that's important to keep in mind as we evaluate these companies, because you can't take on billions and billions of dollars of spending and not have ramifications on your profitability, on all of these things. And at the end of the day, that's how companies will become evaluated. And I think recognizing that that's happening is a big piece of understanding how to kind of trade this aspect of things.
I also think along those lines, so this kind of arrives at point number 2 that's been a pretty foundational thought that I've had through this whole thing. So this would be my point number 2 on the whatever the sports guy has changed my mind, kicking up on the table is you have to trying to keep it narrowed to what you were saying. I think it's also really important to consider what is the product that is coming out of this company, and what is the likely impact to, like, imagine unlocking a whole bunch of efficiency within that company, and what is the product that's coming out of that company, and how does efficiency affect that product? So what I mean by that is, along this lines, everybody immediately jumps to, understandably so, everybody's more efficient, costs are going to get cut. And certainly when you're taking on a whole bunch of infrastructure costs, like you were saying. However, I say there's another side of that coin. And so, yes, absolutely. Let's use some basic numbers. Let's say on average, efficient, proper use of AI tools makes you 5 times more efficient. Just making this number up. But I don't think it's that far off, but let's say it makes you 5 times more efficient. A company of 100 employees, the math works out pretty quickly to say, well, our 100 employees we could cut that 100 employees down to 20 employees, and we're getting the same work output as 100 employees. Let's save 80% on our human resources cost. And that's absolutely going to happen, especially in those smaller shops. But the flip side of that is a company of 10,000 people might look at that same math from the other direction, and they might say, whoa, we don't have to hire anybody, and our 10,000 employees could act like 50,000 employees. That's reverse math in an important way as it relates to the bottom line, because what's the product coming out of that company? Is that product something that is kind of capped? Just off the top of my head, this isn't probably super accurate, but it gets the point across of, does the company make their money in, let's say, ad revenue, as a primary source of profit? I mean, ad revenue, that's not really something that you need to go from 100 to 500 people. You could probably take that cut down to 20 people, and then you're saving costs and whatnot. But if your output, if a company's output is clearly limited by efficiency, and if you imagine the company hiring 5 times more employees, and that directly impacts their ability to raise money through revenue because their output is increased, that's the other side of the coin that I see. And I don't know, another way to think of how it affects revenue. But it is, like you said, to the bottom line, it is the cash is king, where how is cash going to be generated, and what is the efficiency impact of the technology?
Yeah, and I think really what I'm calling out here when I say companies have to invest and that can change the classification of the company, I'm specifically talking not so much about the AI consumers of the services, but more like your Anthropics, your open AI companies, right? Where everybody is viewing them as a tech company, and tech companies historically have these really thick profit margins because they don't have a lot of expenses to produce the software. That's not actually true in the AI world, because there's a lot of hardware costs and a lot of those fixed real estate costs that go into that. And so you can't view them from the same lens as that traditional software company, because they have a lot of overhead of capital expenditures.
Yeah, for sure. The demand on those companies immediately translates to capex. I mean, the more demand, sure, they're trying to offset that with revenue, subscription models, and whatnot, but that just kind of builds the bubble, right? Like the more demand, the more hardware they have to invest in, and as soon as something happens and shifts, and that demand diminishes, the hardware doesn't go anywhere, and it still costs what it costs.
Exactly. And that's the part that I think is getting overlooked at a lot of these type of companies is cool, it's all rosy looking forward, but at some point that growth doesn't come to fruition or whatever, and you are shackled with this heavy burden of capex that they're going to have to carry.
So I think it's actually, I mean, I wasn't entirely sure if I was going to bring it up, but I think it's along these lines because it is one way that I'm personally investing in this market, specifically AI. Um, and this is a hard hat investment. This is the 1 to 5% of my portfolio investment. This is the speculative play because who freaking knows? But it is along the lines of that infrastructure is we are seeing, and I won't even name drop any company names because you can search and find plenty of them. Bitcoin mining companies that they clearly have this massive infrastructure that's it's built, it's there, it's been mining Bitcoin, etc. But it is a massive cloud of compute, and that is exactly what the AI build out is needs, and it also threatens. This is part of, I guess, to your point, what would threaten something like Anthropic is these Bitcoin mining farms are actually starting to pivot where they're not shutting down all their Bitcoin mining, but they're pivoting part of their infrastructure and now serving AI infrastructure. They're serving their compute to service the demand in the AI space. And so that's something I find super interesting because, again, thinking of that bottom line, thinking of that cash king, they're not taking on more infrastructure. They're using what they already have and they're pivoting it momentarily to service a high demand field. And so I feel like those are super interesting to me, but again, super speculative. But I think it goes along these lines as to what to look for in this type of burgeoning Wild West market.
Yeah, it does. And the other piece I'd add in there is kind of what you're also alluding to. Know the product that's being created. Know where is the money coming from when it comes to a particular company. Because, famously, right, Ray Kroc, who infamously is known as the McDonald's guy, right? He took this guy, the McDonald brothers bought their restaurant and turned it into a franchise. And he famously had said, you're looking at this all wrong. You're not running a restaurant business, you're running a real estate business. Because that's where a lot of the value and stuff was owning the real estate and leasing that out to the restaurateurs to run those things. But the real value in the McDonald's wasn't so much the burgers and fries that they sold, but the land that they were sitting on and the franchise fees that came in from that.
Which also famously, same exact idea. Kathy Woods from ARK Invest said, it was, I don't know, 5 years ago, maybe. Yeah, 4 or 5 years ago, said the same exact type of thing about Tesla. She said that she was betting the farm essentially on Tesla, not as a car company, but as an AI infrastructure. And that came from the fact that, yes, Tesla's a car company, but they were and still are one of the largest sources of data gathering and model training data in the automotive industry. And so I think that's the same exact, more modern McDonald's.
So that brings me to the next point that I want to touch on, which is also one of the other ways that I think AI is going to end up kind of pushing people out of the companies that they work in. And that's companies' budgets will always be limited. There's no such thing as an unlimited budget. There's a limit to everything. So for every push, there has to be a pull. For every pull, there's a push. There's always a balance to that. And I think one of the aspects that I think are going to be some of the first casualties of workers in this kind of AI age is actually going to come from maybe not such an obvious source, but these companies are going to be pouring expenses, pouring their cash into this AI technology, whether or not it's actual hardware, whether or not it's subscriptions, whether or not it's some vaporware that somebody's going to tell them buy this AI whatever and it's going to whiz bang change you. No matter what it is, the companies are going to pour money into this AI, but they only have so much money to do it in, and so they got to figure out, well, how do I get more money, or how do I save money from other areas? And one of the common ways that companies will use to raise short term cash or have short term expenditures is they cut manpower. And so I think you're going to see people losing their jobs, not because AI is replacing their role, but because the company feels like they're going to get left behind if they don't spend money on whatever AI aspect of the AI technology is. But the very fact of that spending, they have to get that money or cost from somewhere. And I think that is going to be an interesting area where I think there's going to be job attrition and job shedding simply by companies trying to cut costs here, there, and everywhere so they can have more money to spend on the AI and upcoming technology. Now, the last bullet that I want to put out here is yet another area where AI could likely replace or you push you out of your current role, and you might think, oh my gosh, AI is going to come in and do my job for me, and then I'm no longer needed. But actually, what I've noticed is starting to happen is it's kind of the opposite. It's the people that are not embracing AI that are getting kind of pushed out. And there was an interesting article this past weekend in the Wall Street Journal about companies are wanting to really lean into AI and try to get their workforce to unlock those ideas in their head that might have been pent up, like Viper was kind of mentioning before. And the way that they're trying to do that is encourage employees and stuff to interact with AI, use AI for this, try to go experiment with AI to see how can it improve your job, how can it make you better. And there are workers that basically don't want to engage in that for fear that if they do, they're putting themselves out of work or some aspect of that. And then what's actually ending up happening is these companies are cutting out the people that are not embracing the new technology, which is kind of ironic if you think about it, because it's not they're not being replaced by the actual technology itself of doing their job, but the fact that they're not embracing the change is really kind of the one that is causing them to potentially lose their job. And that can be extrapolated and up to the actual company level. And it's why these companies are pushing on their employees to engage in AI and try to figure out what it might mean. So they don't know. They don't know a go do X, Y, and Z with AI, and that's going to be great and wonderful. They're trying to get the employees to experiment with that, to come up with the innovation, because these companies themselves need to innovate or they will stagnate. And companies that don't have innovative new products don't sell things, consumers don't buy them, and they enter a death spiral where they don't attract new revenue. They don't attract new revenue, then their costs rise over time from inflation, and that shrinks their profit margins, and then it just starts decaying the company. And so you have to be innovative as a company so you don't stagnate, but that requires the companies to actually have their employees and their workers strive for innovation and embracing of those new aspects of technology. And the fact that those people that don't really do that are also likely at risk of their employment.
Yeah, this is this is one that hits near and dear to home for me. I certainly acknowledge that I probably, at least as of this recording, I probably don't work in the the average scenario when it comes to AI. Meaning, where I work, it is full steam ahead, full support, and very. This is how we maintain a competitive edge in our industry level of priority. So I realize that may not be the case for everybody. But this innovate or stagnate, I mean, it goes back to, like you said, the companies need to do it, but you as an individual also need to embrace that, because back to my aha moment, when I first was using ChatGPT and I was like, holy smokes, this is actually real. This is something big. There were two major cycles that I anticipated of when this technology touched corporate America. The first was it's a cybernetic limb. It's replacing your legs with legs that can jump 100 feet in the air. And so the first wave was just adopting it and being that person that could jump 100 feet in the air, and just showing that foresight to innovate your position in that way. The second cycle is a little bit more dramatic and it's a little bit more painful. Was that as companies start to acknowledge and see the value of their employees jumping 100 feet in the air, the ones that are not doing that are going to get replaced. They're not getting replaced by AI. They're getting replaced by somebody who put the legs on. And I'm certainly now fast forward a year and a half, whatever it's been. And I mean, that is playing out to a T where and it's playing out way faster than I expected. But that makes sense given the space. But earlier in this year was when we started rolling out the tools in my company. And it was rolled out a little quietly, and it was kind of, I was chomping at the bit. Like I was like, I've been using these on my personal projects. You've clearly seen it in the trading dashboard that I made. I was ready. I was like, I can't wait to get access to these tools in my job because there's all kinds of stuff I want to do with it. So as we started rolling it out quietly, I was all over it, jumping on it, whatever. And now fast forward less than a year later, and the messaging is now coming down of AI is no longer optional. And I mean, we're literally talking a year and a half since it was forbidden because the security risks, to now it is understood, it is adopted, and the messaging is it is not optional. And to this point of innovate or stagnate, it is start using it today or you're going to get left behind. And so to me, that's exciting because there's no threat to anybody's job, at least again, in my potentially non-average scenario. And what it enables me to do is just do my job much more effectively, much more specifically. I mean, I deal with a lot of data. I deal with a lot of data sets. And so now I'm able to very rapidly and easily be like, well, what if we look at it from this perspective or this, visualization? And then we find all sorts of other things. So that's, again, not giving anything to the doomsdayers, but it's the idea that innovation with this technology is happening at every single level. And that's exciting. It should be exciting. And just finding a way, and because it touches, like I said earlier, the breadth and scope of what the technology touches, it's not just engineers. It's everything. I have a friend in HR. It's he's doing the same thing. And so to me, I think that's exciting, but I also completely accept there's a lot of people that are just tired and they don't want to do it. And I can empathize, but yeah, that's, I guess the free market starts to settle in at some point.
And that brings us to the end of this week's episode. Is AI going to take your job? Chances are yes, but not the way that you think. It could be your company cutting costs to spend more on the AI world, and they just got to remove people. It could be the innovation, lack of embracement of AI by individuals that might kind of push them out as kind of old dinosaurs that don't adapt, don't move like that. But at the end of the day, the only thing that I think really is for certain is that the way and manner in which AI is going to transform companies and transform the workplace will be uncertain. So uncertainty is the only certainty I think that is out there. And the fact that something is uncertain shouldn't cause fear from an investor or a trader perspective, because the core fundamental building blocks of a company are still true, no matter what the technology is, no matter what the entity and company is doing. Profits and cash are king. The way that the company innovates matters. And I think all of those things, when you look at them through the lens, is very useful to keep that in the back of your mind, because you don't have to know how is a company going to move forward in a particular manner, or is this going to be the next kaboom, right? You can still look at the fundamental building blocks. What is the product that they're building? How are they building it? How are they selling it? What is the cost ramifications of that? The debt, the liability, the revenue potential, the market share, all of these things can be still used to evaluate it. And while it's exciting to get swept up into this world of, oh my gosh, AI is going to take these companies to the moon, at the end of the day, the ability for that company to make a profit has to come due to pay the checks. And I think focusing on that will help you see through a lot of the noise and a lot of the hype and a lot of the potential bubble, to really kind of use those building blocks when you're evaluating companies, when you're looking for where you want to spend your money, to invest and to have it grow. And don't get caught up all the time on the hype this, hype that. Really strongly believe that the whole reversion to the mean thing, people are going to overstate the capabilities of AI. They're going to overestimate the profitability, which is going to drive stocks up into the stratosphere. Now, on the same token, when they realize that that's not really going to take them up into the stratosphere, they are going to do the same thing in reverse. They're going to overestimate the fallout and overestimate the downside, and that's where you get these giant swings, this high volatility. Look at the .com era, right? It's a perfect example of where stocks just went to the absolute stratosphere on these hopes, dreams, and wishes, that may someday come. And then when people realized that it wasn't coming to fruition in the way that they thought it would, everything crashed massively to the downside. But turns out they overestimated the downside as well, because the technology really did change things, really did create new industries, and those companies came roaring back over time. And so I think that uncertainty, or the fact that traders are always going to overestimate and overshoot to the upside and to the downside, is something you as a trader can take. And we don't know exactly how it's going to pan out, but history will always rhyme. It doesn't always repeat, but it often rhymes. And I think it's that type of knowledge, that type of understanding that we can take and internalize, and use that when we look at the markets, and use that perspective to decide where we're going to put our next dollar. How are we going to invest that? How are we going to grow that to $2, to $3, to $4? So good luck out there. Have fun. And remember, think outside the block.